Hello everyone, good evening to all. In today's video, we are going to see one more indicator which is nothing but simple moving average indicator, which is very famous indicator, but we don't know what are the maths behind it, how to use it, and what is a simple moving average. We always see that if the price moves up above the simple moving average, what is the trend? If it goes down, what is the trend? What is triple moving average? What are the periods of? We saw many things, but we don't know the mathematics behind it and how to use it and how traders use it. So I'm going to tell you, but again, the point is back testing is your responsibility. I'm going to tell you the mathematics and everything behind it. So without wasting any time, let's get started. Hope my I really hope my screen is visible to you all. So these are just, don't worry, I'm going to remove all this. So the indicator today we are going to learn is nothing but simple moving average. A simple moving average indicator. A simple moving average indicator is nothing but you know what is normal averages? When you take average of three numbers, suppose I am taking average of three numbers here, like average of 1 plus 1, 2, and 3. I'm taking average of these three numbers. So, what will the average of these three numbers? Can anybody tell me? This will be nothing but 1 plus 2 plus 3 divided by the number of terms, which is nothing but 3, which will be equal to 6 by 3, which will be equal to 2. This means the basic average of any three numbers will be the sum of the terms divided by the number of the terms. Similarly, same concept lies here. If we want to know that what mathematical formula for a SMA or simple moving average, so the formula for a simple moving average is P1 plus P2. Sorry for the noises, guys. I live in a hostel in IIT, so I can't remove all the noises around me. So this is the formula for an SMA, which is nothing but a simple moving average, which is P1 plus P2 plus P3 up to Pn divided by n, which is same as a simple average that we saw for numbers. But the question is, what are this P1, P2, Pn, and what is this small letter n? So this P1, P2, Pn are nothing. It's P1, P2. Oh, why is it not in caps? P1, P2, P3 up to Pn is nothing but the prices over some periods. And what are those periods? The periods are nothing but n. So, what is the meaning of this? That P1, P2, Pn are the prices over specific periods and n are the periods. So, P1, P2, P3, and Pn are the close prices. Is it compulsory to take the close prices? No, we can take open also, but in simple moving average in general, in the traditional indicator, we take close prices. So P1, P2, Pn are the close prices of each candle. Suppose this has a close price of 25161.6. This has a close price of 25170.05. this this has a close price of 2518.25. So in general, P1, P2, Pn are the prices of each candle, or the close prices of each candle, and here we take the average in some period. So I told you that we take average for some period. So what are those periods? Suppose I put this indicator, okay, and don't worry, these are like so many of lines, but I'll change the setting so you don't have to worry. I'm removing all different averages. I'll explain it to you what are these lines, why this happens. When we read triple moving average, this will be very helpful to you. But now we are not. We are just using simple moving average. So this is a simple moving average indicator with a SMA period of 20. So here we took the period, which means n equal to 20, which means up to 20 candles, up to 20 periods, we will get this average price, and according to this average price of 20 periods, this line will be drawn. So suppose this candle is going on in the live market, and no, not this candle. 1, 2, 3, 4, 5, 6, 7, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Suppose this candle is going on in the live market and we took the average of 20 candles. So how this line will be drawn? This line will be drawn by taking the average of previous 20 candles before this. Simply, if this candle is over, now this candle is going, this candle is over, this candle is going on. So if this is the 20th candle, so we will forget about this candle, and the average P1 will be started from this candle. Similarly, if this candle is also over, now this turn of this candle, so we'll stop taking the average of this candle, then P1 will be this candle. Similarly, when the live market will go on, the average value, the P1, P2 up to Pn for calculating the average values will also move further. So in this way, we will be capable of drawing this simple moving average line. See this line, this line, this line. In this way, we will be capable of drawing this line. Now, now the question is, how will we define an SMA indicator of the trading view? The average of selected range of prices, this P1, P2, Pn are the range of prices. Hello everyone. I think my connection was got little bit unstable. I don't know what's happening today. This IIT's internet sucks, man. Sometimes they really me, but it's fine. Now the connection is a little bit stable. Now I'll share again my screen. Hope my screen is visible to you all. Okay. So what is simple moving average? The average of selected range of prices. What are the selected range of prices? This P1, P2, P3 and Pn. Usually closing prices. Is it compulsory to take closing price? No, it's usually closing prices. We take in general. In general, usually means in general we take closing prices. Usually closing prices over a specific number of periods. What are number of periods here? N. N is the number of periods here, which is specific. We'll define how much number of periods we have to take. Where specific where it moves because new prices comes and old prices goes. That I told you, if market moves the 20 here, first the range of 20 is this, then this, then this. If the market goes further, the 20 ranges will also changes according to the live market. It's so simple. So now there are two types of SMA we are going to define here. Here this chart is over. Now I'm going here. Okay. Now there are two types of SMA. First is longer period SMA. Longer period SMA means the periods we take usually like 50-day, 50, 200. Here what we took? Here we took 20 as N. Longer period SMA means longer period SMA means 50 or 200 will be your N. Sorry, small N. Similarly, another SMA is, what will be the inverse of longer? shorter period SMA. In shorter period SMA, we are going to take the n will shorter than the longer period SMA, which means we will take periods as 5, 10, etc. equal to n, small n, sorry. So if the periods are less, like 5 day, 10 day, then we'll take shorter period SMA. If the periods are more, like 500, 200, then we'll call it as longer period SMA. This is very simple. This is not so technical. A very simple term which we define. The range of n defines if it is longer or shorter period. The range of small n. Now, what are the settings? As you saw, I changed the settings in front of you only. Now again I'll tell you the settings of a SMA. See, this is the periods. I told you that I took 20 period SMA here. This is the periods. This is the price which we have to take close price, low price, high plus low by 2, high plus low, open high low close by 4. But what I told you, usually we take close price. Is it compulsory? No, we can change it in the settings. SMA 2, SMA 3 are, you saw in the earlier that there are many lines, but I untick all that lines and only one SMA I took here. So these are SMA 2, SMA 3, which is different periods and different, like close. Here all are close, close. In general, we take close. But if you don't want to take close price, it's your indicator. You can do anything with it. This is the color of SMA. See, we can change the color. This is the size of SMA length. I can change if I want. I can dotted line, step line. It's my wish. We can change the lines. This is the visibility time periods: seconds, months, hours, days, weeks, months, ranges. Hope the settings on SMA are also clear to you. Now, the last thing but not the least, what this SMA represents and how traders use SMA. Okay, so how traders use SMA means we saw that this is the SMA. It's fine. This is a single period SMA, but how traders use it? If the price means this price, if the price crosses over SMA, then we can call it as an uptrend. Is it defined? No. This is the definition of SMA, how traders use SMA. If the price goes above this SMA line, then we call it as an uptrend or a bullish trend. If the price crosses below SMA, hello? If the price crosses below SMA, then we can call it as a bearish trend or a selling trend. And after this, there are two more SMAs which is called SMA crossover. So, okay, I just explained what is in my note. Now I'm going to explain you. See, so shall I remove all this shit? Okay, thank you so much. I'm removing this. See, if the SMA, suppose if the price crosses above the SMA line, then trend. Similarly, if the price crosses SMA line, then according to the definition, this will be the downtrend. Is it right or wrong? You have to backtest it. I always say you have to backtest it. If this is right, wrong, good, bad, I am only going to explain the theory and the formulas behind it, mathematics behind it. You are going to see what's right or what's wrong. Okay. So price crosses over the SMA, it's the uptrend. Price crosses below the SMA, this shows a downtrend. Now this is about a single SMA line. Now we are going to see what will happen if there are two SMAs. See, here Here is one SMA about 20 of close price. Okay. Now I'm going to take another SMA. So now there are two SMAs. Close price. So that's not an issue. So here you can see there are two SMA crossovers. This is one SMA crossover. This is one SMA. This is two SMA. There are two SMA crossovers. So what will happen? How traders will use SMA if there are two SMAs crossover? So if two SMAs crossover, there are two three conditions. One is bullish signal, second is bearish signal, and how the SMAs cross, how the trend is going on. So we have to see that the SMA is crossing short-term SMA or long-term SMA. The SMAs are market is uptrend, downtrend. Suppose here I have two SMAs, but one is of 20, one is of 50. So both are not. How this two SMA crossovers get used by traders, that we are going to see in the next lecture. In the next lecture, we are going to see how the two crossover SMAs are like this. Today we saw what a single SMA means. Like if a single SMA crosses crosses over SMA, it means an uptrend. The price crosses below SMA, this is a downtrend. Now we are going to see in the next lecture if two SMA crosses, what is the meaning of that? The hint is if the two SMA crosses, we have to see the trend confirmation if the trend is going up or down. The SMS we are taking, one is going to be of short term, one is going to be of long term. What is short term and long term? I told you here. I told you earlier. Okay, one is going to be short term, one is going to be long term. The meaning of short term and long term I'm going to tell you tomorrow again in the next lecture. And in the next lecture, we are going to cover this remaining topic of SMA about two SMA crossovers. Then we are going to see some more moving averages indicator.